What we're going to talk about today is going to be an update again on the PPP, which is the Paycheck Protection Program that is still going on. We're going to talk about some just detailed information on how to actually put the accounts that you need to track these into your QuickBooks file for both QuickBooks Desktop and QuickBooks Online. We've gotten several questions on that. We're going to look a little bit into the practicality of tracking your Paycheck Protection Program expenses, and we still do not have any confirmed guidance on that as far as exactly what the worksheet will look like, or if each bank is going to have their own worksheet as far as what you need to submit. But I'm going to show you kind of what I have started in tracking for our clients. We'll talk about the EIDL, the SBA loans, and where everyone is on that, and then a little bit on the unemployment update. So, hey everybody, I see you all chatting with me here. Hi Deb and Mel and Michelle and Barb. It's so great to see you all here again, and I do appreciate that you are giving me some great feedback on these different webinars that I am doing, and that people are getting some information that's maybe a little bit kind of boiled down to the nuts and bolts of what you actually need, because there is just so much information out there, and there's some misinformation, there's some information of how some people are interpreting the rules. I am still going straight to the root of the issue in going to the Treasury Department, going to the unemployment sites, going to the IRS site, going to the Department of Labor, all of those sites, and I am not spending really a whole lot of time reading a lot of articles, whether it's from the Wall Street Journal or Forbes or anything. And even I can say that the AICPA, which is essentially the governing body for certified public accountants, they're putting out some guidance, but they're also putting out some suggestions of how they would like the Treasury to go back and guide everybody on how to interpret some of these rules. And people in my industry are taking that as that is the truth. And really, if you read the whole article, they're suggesting that the Treasury go back and calculate things this way or that way. Well, the trouble with that is people are really, looking for sources of information, and they're jumping the gun and using these sources of information as the truth. And they are then going through and telling their clients, or they're telling other people, this is how you really need to interpret these things. So the AICPA is, suggesting, what the expensing period should be. And it is a suggestion. The guidance in the Treasury Department does not coincide with what the AICPA is saying. So until the AICPA gets enough leverage to have the Treasury Department change the guidance, what the Treasury Department says is the guidance. So that being said, let me just jump in here with the Paycheck Protection Program update. So what's happening here, there's been some concern over the last few weeks as far as giving some guidance regarding the actual need of a business to take the proceeds from this loan. And that has been interpreted many ways, and everybody's heard a lot about this in the media, relating to large entities that you would expect would not qualify, that they would have more than 500 employees, or they would be publicly owned, or they would have some sort of caveat where they wouldn't apply. They followed the rules, and they ended up being able to get the funding. And it was blown up. It was, Shake Shack and, a couple of the other big entities, restaurants, and it was blown up. And so they said, well, we'll give the money back. So after that, the Treasury Department came out with some guidance saying, hey, you certified when you filled out the application that you had an impact and that you needed the funds, and that you may not have had the opportunity to get funds from another source. And my understanding of that, and I will, put a caveat on that, this is my interpretation, is that they're saying you didn't have an opportunity to get funds quickly from another lending source. So it wasn't saying that, hey, I've got, all this money saved up in my savings account. I think I could weather this downturn, or the fact that my business has been impacted greatly by dipping into my savings, but I want to apply for this loan instead. Does that mean I need to give the money back? My opinion on that is, if just because you ran your business well and you were able to save money does not mean that you do not have the opportunity to take this payroll protection program loan. And the reason I say that is because there was no caveat in there that said, if you have a certain amount in savings, or if you were this liquid, you don't get to apply for it. It just said, if you are saying that you are impacted. And I have said all along that every industry is going to be impacted. It's just a matter of when. So some immediately, their doors were shut. They had to send their people home. They couldn't have customers in their store, or their customers were shut down, and therefore they didn't have any opportunity to sell to their customers. Those people were impacted immediately, but there are going to be many, many industries that are impacted in the next several weeks and months. So if you certified that, yes, I'm impacted, they had no certification of how much are you impacted. So they gave the opportunity for people who took the money and felt that they didn't need it to give it back. They extended that from May 7th to May 14th. You have essentially to give that money back. Okay. I'm saying, if you got it, and unless you have some real major ethical obligation that you think somebody else needs it more than you, I don't think that there's any real reason to give it back. And so there was this big threat of, oh, SBA is going to come looking for you. Well, guidance came out this week that yes, they're going to come and review loans that were issued at more than $2 million. So if you got a PPP for more than $2 million, then there will be some review of how the funds were used to make sure that it were used in compliance with how they expected it to be used. So that doesn't really apply to anybody that I work with. I mean, that would have implied that you have payroll costs running around $800,000 a month to get 2.5 times that. Any other loans may be subject to review. And I'm going to just throw it out there that they're really not going to have time to monitor this program in the short amount of time that it has been given. So essentially 2 years from now, it will all be paid back, or it will be forgiven or paid back. In 2 years, they are not going to have the personnel, the time to come in and begin audits on all of these. And so I think if you took the money, even if you have plenty in savings, I'm going to tell you, you're probably going to be dipping into your savings before the end of the year in order to weather the downturn in the economy that is coming and the potential long-term recession that the country is going to be headed into. So to kind of go back to say, everybody's going to be impacted, and don't feel like you need to give that money back because you had a significant amount in savings or you had other resources. It did not have a requirement that an owner needed to put money into the company to weather this. So this was essentially designed to get money quickly into the hands of small businesses in order to get their people or keep their people working. So that's my thought on the Paycheck Protection Loans. They have not run out of funds yet on this second round that I have heard. So people are still getting funding. They're still getting funding this week. There are still banks taking applications. Is it going to last? No. Is there going to be another round? I doubt it. I seriously doubt it. So if you haven't put in an application, I suggest that you get with your bank very, very quickly and get that taken care of so that you get in the queue and you get an SBA number. I'm just going to jump over and see if we got any questions. Okay, so the question I think Deb's asking is, so this was reopened, the Paycheck Protection loans that were reopened. So we're in the second round of the funding. We are a couple weeks into that second round. I'm guessing it won't probably last more than another week at the most. But in this round, they actually designated funds to go specifically to some smaller regional banks as opposed to some of the larger banks. And so the reason that it may take longer to use up the funds, or the loans, the lending amounts are going to be smaller. So it's going to take them time to get through more applications. Just my 2 cents on that, my thoughts. So As people are getting funded with this, obviously the next concern is, what do I do? How do I track it? Where do I put it? All of those things. And so we're going to look at a couple of those things still today, even from a practical standpoint of how do I put this in my QuickBooks file? Because even in my world where I'm following conversations and Facebook groups and posts that are very specific to my industry, there is definitely some different interpretations of how you think they think this should be recorded in your QuickBooks file. So to start with, I will tell you, I've mentioned it before and I'll keep mentioning it. And I know for some people, they didn't have a choice. You don't need to keep this money in a separate bank account. Some banks are funding it to your oldest account you had on file. So if that was a savings account, they're putting it in your savings account. I don't have a problem with that. What I'm saying is you don't need to have just that money sitting in an account that you then have to spend out of, whether it be a new account or an account that you did not have your payroll being directed out of in the past. You didn't have your, you don't have check stock on that particular account. I mean, that just creates a whole bunch of logistical issues. And so what I'm saying is that the accounting for this loan has nothing to do with what bank account it is in. So I've had some people that, okay, it's all sitting in a savings account, and as they have a weekly payroll, we're going to move enough to cover the weekly payroll and any other expenses that you're entitled to use that money for, so rent or utilities. And that's just so that they don't put it all in there and spend it all on operations. So that doesn't really have anything to do with the specific account. The banks and the lenders, or even the clients that are insisting on setting up a separate bank account for this, are creating a logistical nightmare for payroll. And so I don't think, that you really have to think that through. You do not want to be switching, for 8 weeks, let's switch to this account, and then we need to do payroll, and then we need to switch back. Every time you can only have one direct deposit account within a QuickBooks payroll. It takes a few days to actually switch that account over. Every time you switch the account, it needs to verify the account. And so it takes a couple of days to do that. You then have to switch it back when you run out of money in that account. So to me, that's just one of those things that has been just overblown, and I do not agree with it. If you have an operating account versus a savings account, feel free, put that money in the savings account over these 8 weeks and move the money into the operating account as you're using it for payroll expenses. But do not set up a new account, and don't spend time reinventing the wheel on how to get your payroll processed. If you were cutting checks before, cut checks. If you were using direct deposit before, use direct deposit. But this is a short amount of time. 8 weeks goes quick. I mean, we're 7 weeks into this, and it feels like it went in just a blink of an eye for me. So 8 weeks from now, we're going to be done with this, and paycheck protection will be in the rearview mirror. So definitely don't get crazy on thinking it needs to be set up in a whole new system. The other thing is, you don't need a whole bunch of expense accounts to keep track of this. Nothing changes as far as where you are booking your expenses. So initially, you are booking this income, this money that comes in, as a loan. And that's going to sit there as a loan until you find out from your bank, after you submit your documentation, on how much is being forgiven. And then we're going to move the forgiven part out of the loan and over to an other income account. So what has come out is that the expenses that you are using this money for become what they would consider non-deductible. So what people are saying is, oh, well, if they're non-deductible, we don't want to include them with the other rent expense. We don't want to include them with the other payroll expenses. And that, again, back to logistical nightmare. At the end of the year, you want your books to reflect all of the payroll you paid, regardless of how much was forgiven, because you need that number to tie in to your W-2s. You need your rent. You don't want it to suddenly show that you only had 10 months of rent instead of 12. So what my understanding is the amount that's forgiven, we're just going to move over to essentially it's like a debt that was forgiven. It becomes taxable to you. And because that's taxable, that amount is out there, you subtract all the expenses against it, which includes those things that were being forgiven. It's a wash. It's a wash. So you aren't getting the expense for it because it's offset by the income. So don't get confused by that. Don't think that you need to exclude those expenses that you are paying from the actual expense account it belongs in. So your utilities aren't going to go to some PPP expense utilities. Your payroll expense is not going to go to some PPP payroll account. You need to just keep that everything the same, because come this time next year, you really want to know what you spent on payroll, regardless of these circumstances, regardless of the fact that you were given some income that you were able to not have to pay back, essentially. So I hope that makes sense to everybody. And let's see. All right. So okay, so Mel says, well, so their money went into their account on Tuesday. Should I have used it for payroll yesterday? You can. So here's the story. You're not having to take those specific dollars sitting in that account and say, I took those dollars from that bank and I paid payroll with them. You are putting this money into the funds of your company, and then you are having expenses against those. So yes, payroll that was cut yesterday, if it was dated yesterday or dated today, and you got funded this week, then that payroll expense will go into the tracking as an expense. It doesn't have to be paid out of that particular bank account. So any bank that is saying that they require that is interpreting something completely outside of any of the legislation and guidance that is there. Some banks are asking that you set up an account because they want another account they can get fees on. Some banks are setting up an account because you didn't have a bank account with them, and that was the fastest way to fund it. So you had to go to a different bank, and that's how they were getting that funded. So when I get to the tracking of that, Mel, I'll show you how, you're just going to start with your total amount of the loan, and we're going to start, figuring out where we are on that outside of QuickBooks. Okay, so let's see what other questions. Okay, so Tony, we'll get to this in the unemployment section, but I'll say it. I said it earlier this week, and I'll say it again. So his question is there a? Oh goodness, my phone is ringing, and I thought I turned it off. Okay, so if someone on my team is watching and wants to let Sarah know that I am live and can't talk to her right now, that would be great. So anyway, so Tony's saying, well, what is the guideline regarding PPP money if you offer their positions back, but the employee returns or declines to return to their job? One, you can't control whether or not someone comes back to their job, but you need to make them understand that if they refuse to come back to their job, they have just quit. And they quit, and therefore they're not getting unemployment anymore either. And I have I'll explain how you're going to report that. So employees, the PPP money, you get the money, you tell the employee, hey, we've got work for you again. We need to pay you again. We have these funds to do it. And they say, I'm making more on unemployment. I don't want to come back. Then they quit. They will stop getting unemployment, and they will stop getting paid by you. And unfortunately, that kind of falls into some of these FTE requirements, which is full-time equivalent, and the forgiveness portion. But I'll kind of touch back on that as well. But just know that any employee that refuses to come back to work has quit. And if they're quitting to stay on unemployment, then they would like to work, they'd like to get paid for doing nothing. They're probably not going to be that great of an employee for you to keep anyway, because they would prefer to be doing nothing and getting paid. So, Brenda asks, and again, we'll get to some of this tracking. She's asking about what payroll number are you including in your expenses. So Okay, so quickly we're going to look, oops, let me go back. How do we go back? Oh, not there. Okay, let me, okay, I think I'm back. Okay, so I'm just going to jump over real quick and show how I would like it from my perspective and how I think the loans should be set up, both the PPP and the EIDL. So we'll jump over to QuickBooks Desktop first. And so when you go to set up an account in QuickBooks, you are going to go to Lists and Chart of Accounts. Alternately, you have, if you have your menu open, you can choose just Chart of Accounts from here. First, I'll tell you, if you're using account numbers, you might want to scroll through and find out what an available account number is so that you can go ahead and get that assigned. The PPP is being set up as a short-term or a current type of liability. So you're just going to come in and go to account. You're going to do new. And a choice for the current or the long-term liability is not here. You need to come down here to other account and choose other current liability. You hit continue. So when you have already gone through and looked to see what your account number structure should be, you're gonna, what I'm naming this is whatever bank it's coming from. So, and PPP loan. And what I'm putting in this loan is when it's coming in through the bank account and I'm going to make the deposit into the bank account, I'm offsetting it against Joe's bank PPP loan for the entire proceeds, even though there is a high chance that we are absolutely going to have a good portion of this forgiven. Everything needs to come in here as a short-term loan to begin with, because for these 8 weeks, it's going to sit on the books as a loan. You owe that back until the bank has given some forgiveness portion. Okay. So is everybody seeing this other than, say, Deb's not seeing my screen, is not showing it? So you're not, can everybody see my screen share or no? Okay. All right. So Deb, I'm not sure why you're not seeing my screen share, but I'm showing QuickBooks Desktop. And I'm going to jump right over and show online for those people that are in online in just a second. So the other piece of the lending that people are getting are the EIDL loans through the SBA, the Economic Impact Disaster Loan, or I don't know. You know me, I cannot keep straight the EIDL, what it stands for. Disaster loan, I got that. But EI, I'm getting it confused with the IRS payments, the stimulus checks that went out. So if anybody wants to correct me on what EIDL stands for again, I'm always game for that. The EIDL is going to be a little bit economic injury. Thank you, Michelle. Okay. All right. So the EIDLs, I am setting the EIDL and the grant portion of the EIDL. Currently, I'm setting that up as a long-term loan. And the reason I'm doing that, so I'm setting the PPP up as short-term, even though it's going to extend past a year. Any portion that is not forgiven, it's only going to extend past a year by 6 months. And so this is a very short-term loan. And in all likelihood, the amount that's going to sit on your books for any length of time is going to be a very small dollar amount, because the goal is to have most of it forgiven. So, so I'm putting that as a short-term. The EIDL loans I'm setting up as a long-term. So I'm going to come down here and add, new. Again, it's not one of the pre-programmed choices here, so I'm clicking other, and I'm choosing long-term liability. And I'm going to pick another account number. And these are from the SBA directly. It's not going through a bank. And I'm adding that. So if you get any funds in that is considered the grant portion, and we'll talk about that in a minute, I'm putting that here. And then if you are getting, essentially you're getting notification that here's an amount of additional funds that are available to you, sign these documents, you're going to end up with a 30-year loan at 3.75% with no prepayment penalty and no payment until 12 months after the loan is signed for, then you're going to have that as a long-term loan, and that's all going to come in here. What's going to happen when we have the forgiveness portion, we're going to wait until the bank tells us how much is forgiven. We're going to do a journal entry, essentially, that is going to debit make a journal entry. We're going to debit the loan. So essentially, we're going to come in here and debit the PPP loan. Oops. And for however much we received that is being forgiven. So say we had 25,000 forgiven, we can put a description in, and then the offset to that is going to be an other income account that will eventually need to be set up in 8 weeks. And that's going to come in here to other income. And essentially that's going to be called PP, oops, I'm just using all caps, so save me some steps in forgiveness. And that's all we're going to do. The rest of the time, you're just spending the money, and we're going to track it in an Excel spreadsheet. Okay, so real quick, we're also going to jump in and show you what it looks like to do this in QuickBooks Online. So, oops, let me jump over here and share this. Okay, so in QuickBooks Online, for those of you who are using it, to add a new account, fastest way, come down to Accounting, slide over to Chart of Accounts. You're going to be doing the same thing that, I'm just in a sample company, so if you're using account numbers, you're going to want to find an available account number. If you're not, you're just going to click on New. You're going to choose the account type, other current liability. In my detail type, I do go ahead and pick a type of line item here because it can affect some reports. So I don't want to just leave it at default, which was like federal income taxes or something. And I'm going to call this, whatever my bank. Sorry, Joe's Bank. PPP. And the reason I'm putting the bank name here is because you may have gotten a loan from a bank that isn't typically who you get lending from, and you just want to, the money is going to come from them, and you just want to make sure that you know who you are paying back in, because eventually if you have a portion that is not forgiven, you're going to be paying the bank back. You're not going to be paying back the SBA. And then if you wanted to go ahead and set up one for the EIDL, you're coming back to bank long-term liabilities. Change this to a note payable, and I'm calling this EIDL, SBA, and save and close. So that's how you set up the loan accounts. And then, like I said, there will be an other income. You don't want it mixed in with your regular income accounts because you don't want it to be a portion that is somehow being included in any type of calculations relating to your sales numbers or anything like that. You just wanted other income. Other income puts it down at the very, very bottom of the profit and loss statement, makes it really clear to tax preparers to look at that and do something with it. And it could be that we go ahead and set up an other income account that is specific to that. That's PPP forgiveness is in the name. And so it's very easy to see. Okay, so let's jump back over to our slideshow. Okay, and let me check on our chat. Okay, so Deb's asking, I'm curious what a typical business loan percent is, more than 3.5. Are you asking for the interest rate? If yes, a typical business loan is more than than 3.5%. So the EIDL loans are going in as 3.75% for a for-profit business and a 2.75% for a not-for-profit. The PPP loans are a 1% loan over essentially 18 months. The first 6 months, you do not have any payments, and then you have 18 months to pay off the balance. But typically your interest on a business loan or even for a line of credit, you're looking at higher than that. So, okay. Oops. Sorry, guys. Okay. All right. So the next piece, and this is the big thing of how is everybody going to figure out where they are and how much money they've been spending on this. I have created, and I'm still tweaking it because I'm trying to decide the best way to kind of track everything, because there's two pieces. The forgiveness on the PPP is an expectation that of the funds, that you're spending at least 75% of the funds on payroll costs in the next 8 weeks, and 25% could be used for the other expenses they're allowing, which is rent, mortgage interest, utilities, and possibly, well, I was going to say interest on debt you had prior, but that one might not be forgivable. You can use it for it, but it might not be forgivable. Anyway, so 75% of that needs to be used for payroll costs. And during those 8 weeks, you also need to, your payroll costs cannot drop more than 25% from where they were in the period that they are comparing to. And your full-time equivalent employees need to stay on track with the amount of full-time equivalent employees you had in either, I wrote this down, either February 15th to June 30th of 2019. You can figure out what your full-time equivalents were at that point, or your full-time equivalents that were you had in place January 1st of 2020 through February 29th of 2020. So it is your choice. Your bank is not going to make that choice for you, and they should not force you to make that choice. They shouldn't say you have to use this versus this. You have that choice. And the reason being is some people from this time last year to this time to right now, you've had a significant change. And so you would rather them be, if you had more people last year than you had at the beginning of this year, you don't want to try to recoup all your payroll to match that. It's going to be practically impossible. So those are the caveats for keeping your getting some forgiveness. You need to not cut payroll more than 25% and have an equivalent amount of full-time equivalent employees, and by June 30th of 2020. Okay, so I'm just going to take you into an Excel spreadsheet that I've kind of been working on, and just and talk to you a little bit about what I'm doing. What I've been telling clients to do is, as soon as you get the money, you need to figure out what you're going to have as far as expenses as soon as you can. So you kind of need to do a projection. And so if you have what I've done is I've set up a spreadsheet. What date did you get the money? I'm assuming, okay, you got the money 2 days ago. Figure out what 8 weeks from then looks like. It is not 2 months, it is 8 weeks. So this 8 weeks ends on June 30th for this particular loan. So you can't say, okay, it's going to end on July 5th, saying, oh, that's 2 months from now, or July 6th. It is 8 weeks. And so that is 56 days. So figure out what your 56 days is from the date you got funded, not from the date that you signed your paperwork, not from the date that you submitted your application. It is the date from when the money hit your bank. And then what I'm doing is I'm setting up the date I got funded, how much was the total loan for. So the bank gave you, in this case, $58,000. What's 75% of that? That is what your target is for your payroll costs. You want it to be this dollar amount or more. And then what's left over is 25% that you can use for other costs, which, like I said, utilities, telephone, rent, mortgage interest on your building, those types of things. And then I'm going through and putting in the schedule. Okay, so I have payroll. I think I put a date in here wrong. What was I doing? So, anyway, oh no, I see. Okay, so it's a biweekly payroll. It pays on a Friday. I treat Friday as the payday. That is the date that it's leaving the account. A lot of times it leaves the account the day before. So, but the payroll is dated the next day. It's because of the direct deposit. So I'm using the pay date, not the direct deposit date. Putting in each of those, what I think payroll averages on my biweekly payroll. If you are a weekly payroll, I would be listing all the weeks between 5/6 and 6/30, what pay dates there are. And on average, how much am I running in payroll? The payroll cost is the gross payroll. It is not, you're not subtracting any taxes. You're just putting in the gross payroll. So for clients that are using QuickBooks for payroll, it is pulling essentially, like from our payroll summary, we're taking the gross. So some weeks, maybe this is 9,700 one week, maybe it's 10,100 one week, so on average, you're thinking it's going to run around $10,000. If you have all salaried people, it's going to be really easy. If you have one person, that's the owner, it's going to be real easy. If you have a whole bunch of hourly people, it's not going to be so easy. So this is the expectation. So I've labeled that on my tab down here as expected. This is what we're expecting. The other payroll costs that you can include are going to be retirement, the matching, the piece that the employer matches. So some people pay with each payroll, some people pay once a month. So in this case, this particular client pays once a month, and it averages about $400. The other things you can add in here are your health insurance costs. So if you had, and it's the health insurance that the company is paying, not the amount that's withheld from any paychecks. So you're going to figure that in there. And what I'm doing here is I'm keeping track of it. If it's a payroll cost, I'm putting it in one column. It's coming over here. And if it's an other cost, I'm putting it over here. And then I'm subtracting just to see where I'm at. So from an initial calculation, I haven't included any utilities yet, no telephone. In this case, if I had health insurance, I'd put health insurance in here. Maybe you have mortgage interest, so you have a loan payment that you have to make on a building. I'm going to say that that's going to be somewhat rare because most people keep their building outside of the entity that received the loan. So you may be paying rent, which gets to be included on this spreadsheet, but you may not have a mortgage interest. And on those, if you did get a PPP that is for some sort of rental property, it's the interest portion only, not the principal, is what we would be including here. And here with my retirement matching, I'm only including the matching. I may be sending, $800 to my financial institution that handles my retirement account, but only $400 of that is my portion. The rest was subtracted from employees. Okay, let me jump in, see if anybody's got a question. So Larry's asking about, what kind of things can you change relating to, so your FTE hours may not be affected, or they may be affected. And so can you increase other things like how much you're matching on health insurance? Can you start paying for more health insurance? So you still have to meet the FTE requirements. So, you can meet the payroll cost where it hasn't dropped more than 25%, but your FTEs aren't going to have anything to do with how much you're spending if you decide to match more or pay more into health insurance for your employees. It's not going to change the hourly requirement. So the FTE calculation, just so you know, is based on the full-time equivalent that it per pay period for that month. So it gets very complicated. But what you have to keep in mind, and this is one of the controversial issues I keep seeing, is, well, are people basing that on 30 hours or 40 hours? Well, in my lifetime, 30 hours has never been a full-time employee. 40 hours is a full-time employee. So if someone is working 50 hours in the week, you are only using 40. And if they're working less than 40, you are using whatever they actually worked. So if in your pay period, if you have a weekly payroll, the hours available are 40. So if you know how much the total hours are, capping it at 40 per person, divide the total number of hours by 40, that will give you a number of employees. Usually it'll give you a fraction as well. So maybe you have 7.4. That's going to be 7. That's going to be 7 full-time equivalent employees. And maybe you have 2 full-time people and 6 part-time people, and that equates to 7 full-time equivalents. So you're wanting to get that as close as possible. It is going to affect your forgiveness on a percentage basis, not a dollar for dollar basis. So they will prorate it based on how much your FTEs have dropped. So hopefully that makes some sense. It's kind of an ugly calculation is what I've determined though. Okay, so Michelle says, okay, so she's a person who doesn't get paid as an employee out of her company. She's in a partnership or an LLC, a sole proprietorship. How do you account for the payroll costs for you? It's interesting because what they're doing is taking, if you were a Schedule C or you were a partnership and had self-employment income on your K-1, they are allowing you to take 8 50-seconds, so 8 weeks out of 52 years of that number that was on your Schedule C for 2019 or your K-1 for 2019 that shows self-employment income. And that is how much they're allowing for forgiveness regardless. So that's it, you're capped. So if you had a big year last year, it's still capped at 100,000. So if you had a profit of 120,000, they're going to take $100,000 and divide it by 52 and multiply it by 8 for 8 weeks. And you will end up with a $15,385 will be your amount that can be part of this forgiveness calculation. So it has nothing to do with how much you draw out of the company, how much you take as a distribution, nothing. It has to only do with 2019 and taking 8 weeks out of 52, assuming you earned it evenly all year long, taking 8 50-seconds of that amount, and that's how much they will include in the forgiveness. My thought on this is that that's going to be the piece that the banks are unclear on from the get-go. So that's going to be a piece where you are having to make sure you understand the guidance and from the Treasury that you can say, yep, here's how it's supposed to be calculated. I do feel like the Treasury will give some guidance on the forgiveness calculation, and I know banks that participated in the PPP loans will also be coming up with guidance. The trick is going to be to make sure that the banks aren't overstepping and trying to deny things that should be forgiven based on the regular rules from the Treasury. So once you've come up with your calculation here, as far as, okay, based on what I'm seeing here and the things I can think of now, I've got 4 payrolls that are going to hit in these 8 weeks. I have 2 retirement matchings that I'm going to have. That brings me to $40,800 in payroll costs. Subtracted from what I say is my 43.5, I still have 2,700 I need to get to the 75%. So, okay, maybe there's health insurance. Maybe there was my SUTA payment that I got that got included here because I got my PPP loan before I made that state unemployment payment. Um, Maybe there is a chance to um, move up some payroll. Not a lot. I wouldn't get crazy. I wouldn't start doing a bunch of bonuses, but you know, I would say if you're really close, you might want to say, okay, let me bump a couple of salaries. Let me bump my pay. Let me do something to get me to that 75%. Then in the bottom category, you know, right now there's, you know, you're going to pay rent on the 10th of May, the 10th of June, you know, $6,000, you have 14,500 to play with, you still have 2,500 to spend. Okay, so maybe you're adding a line for, you've got 2 internet payments to Spectrum, you've got a phone bill that you need to pay to somebody else, you have trash or any type of other, you have electric, you know, gas, any of that, that if you have to pay that directly, you're going to list those things so that you can kind of have an idea of, yeah, this is how close I'm getting. But worst case, at this point, you know, I'm going to want to find $2,700 to pay in payroll costs. And if I do that and I don't find anything else to spend in the other category, I'm going to have a loan of $2,500 that I need to pay off in 18 months. So that's not too bad. So once you kind of do this calculation, you think of everything, you're thinking, okay, what I would suggest is go through the last couple months of bookkeeping and your utilities account and see when things are hitting. Maybe some things hit quarterly, maybe they don't. You need to base this on when they're paid, not when the bill comes in. And then on the actual tab, so this is, the first one is kind of my expected, this is my forecast of it. This is what's actually happening. And what I would include on here, and I didn't yet, is, you know, what method I used to pay this. Did I pay this with a check? I would list a check number and what bank account it came out of. Same with my health insurance. Biweekly payroll, I would, you know, be listed. This is the pay date. This is the gross. You're going to be saving somewhere that payroll summary so that you have anything you're including on this. You want to have a piece of documentation, I suggest saved in a PDF file of some sort that supports that number you're putting on this spreadsheet. So you're going to have a copy of the rent check, or you're going to have a copy of the payroll summary, or the copy of, you know, the reports that you use to support how much you're paying in to your company that handles your retirement account or your health insurance. You're going to have a PDF. You're going to have that match up with this so that you can very easily pull up a spreadsheet, and then you can have the PDF that goes with it. In addition, they may request bank statements. And depending on when your loan was funded, it's going to could be tricky, because if it was, in this case, it kind of falls at a pretty good time. You're definitely going to have the May bank statement, and before the forgiveness is calculated, you'll have a June bank statement. But if you were funded towards the end of a month and your forgiveness date ends kind of early in the month, you may be looking at pulling reports from, you know, your online banking system, or if it's a bank that you normally bank with that's doing the loan, they should be able to pull those records if they need it. I would highly recommend that you do not use a credit card to pay these. While the IRS treats something paid by a credit card as paid when you pay it with the card and not when you pay the card, I don't know what's going to happen here. So if you've been using credit cards to accrue points, to, you know, so you're putting everything you possibly can on a credit card, I, in this case, say don't. You're going to want a trail that is going to show that it came out of your bank account, because paying the credit card is not a forgivable expense. Even the rent is a forgivable expense, write a check. Utility is a forgivable expense, write a check. Or use your debit card out of that bank account. Do not use a credit card. That's And if you can't figure out how to do that, then you're going to have trouble, I think, getting things forgiven. So definitely don't use credit cards for this stuff. Okay. Okay. So one of the things that the PPP application asked for was total number of employees. And that definition was full-time, part-time, didn't matter. And it had nothing to do with FTE. So I think that there will be some certification that you are providing the FTE numbers for your comparative periods to them at the time of forgiveness. At some point, they are going to say, okay, what are your FTEs for these 8 weeks? And what is your FTEs for February 15th, 2019 through June 30th, 2019, or January 1st, 2020 to February 29th, 2020. I think that's going to have to come at the forgiveness point. And it was very confusing on the application, and depending what banks you went through, some banks were asking for this information up front. Some didn't. They just cared that they were certifying that you had less than 500 employees, whether it be full-time or part-time. They didn't care. Or piecework or whatever. They wanted a number so that they can make sure that you were under the 500, which was the limit for a company that could actually apply for the PPP. So if you, some of the banks said, okay, looking forward, this is going to be forgiven based on FTEs, give me these numbers. But at the time, there was no guidance for what period to include. FTEs for all of 2019, because that's the information you were giving them to calculate your payroll, your payroll costs, or one of these other periods. And the guidance is out there now. So I'm guessing that they will actually be requesting that FTE information at the time of applying for the forgiveness. Okay, so other pieces that play into this are the EIDL grant. So if you all recall, there was an opportunity, I think the premise was you're going to apply for this EIDL grant. And it was, you're going to get $10,000 in 3 days. You're going to get it immediately, and it's going to be a grant. It's going to be forgiven. You're getting it because we need to get businesses with money in their hands to keep their people from going on unemployment. In reality, that $10,000 arriving in your bank account in 3 days never happened. It is trickling in as we speak. And people were getting funded in a lot of cases. They got their PPP money before they got their EIDL grant. And in that case, the EIDL grant will come off of this loan number as far as how much is available to be forgiven. So if you got all $10,000 that was available, then only $48,000 of this is available for forgiveness. What we don't know is the 75% that you need to hit. Is that off of the total loan amount? My gut says yes. Or is it off of the amount that's available to be forgiven, which is in this case would only be $48,000 if you got a $10,000 EIDL. I do not know that answer yet, because that would really change things. If this number was only $48,000, you're looking at only having to spend $36,000 on payroll. So that's why my gut says, while the 75% is going to be on the whole loan, you are still only, no matter how much you spend, you're still going to have to pay that $10,000 back. So if we go back to our expected calculation, where I said, okay, let's just say we used up all of the payroll costs at 75%. I've got $2,500 that I didn't spend on available expenses, not payroll costs, not rent, not utilities. I'm going to have to also pay back my EIDL. I'm going to have $12,500. So the fact that they gave you the grant and said you don't have to pay it back, they are taking that away if you got funds from multiple places. Just and rightfully so. It's all one pot of money that was put into this act. So you really, if you're getting it from multiple sources, at some point you cannot have it all. You can't have your cake and eat it too. So just so you know, I think that that is going to actually be a thing. How they're going to account for that, I don't really know. But here's what I can tell you is that the 10,000, if you haven't gotten it yet, it's coming in. It's based on what you listed as number of employees on the EIDL application, and the number of employees it was asking for is number of people on or employed on January 31st of 2020. So if you had 20 people, the max you could get on this was 10,000. If you had one person, the max you could get is 1,000. So it was a little bit confusion where it said, okay, everybody's going to get $10,000 free. Really, it's not really the case. So, okay, let's see. If you got the EIDL grant, does that amount impact this? Yes. I thought the amount you got reduced to the forgivable amount. It does. And again, I don't think, like I said, I think that the intent was that $10,000 was not earmarked for payroll. The PPP money is earmarked for payroll. And so you need to spend 75% of the total loan, regardless of how much you got for the EIDL, on payroll. And I would go that route. I would lean that way. Otherwise, you could come up short and be far short from hitting your 75%. Workers' comp, nope, not part of payroll costs. So the payroll cost definition was exactly what was included on the application. And the definition was essentially gross payroll to employees. It can't be to contractors. It was the matching on retirement. It was the employer share of health insurance, and it was city and state tax expense to the company. So in our case, that really only applies to state unemployment tax and for people who have to pay in the St. Louis City P10, that would be part of that. But anything relating to workers' comp insurance, not part of payroll costs, even though if it didn't have payroll, you wouldn't have that cost. It was not part of it. So Deb says, yeah, so the EIDL is not really a grant. It is a grant if you didn't get the PPP. It's not going to be, so if you got anywhere between the $1,000 to $10,000 and you never applied for the PPP, that was free money to you. We're going to, you're going to get it. Eventually we are going to move it to an other income so that it's not sitting as something that you owe to showing as a liability. But the other piece to that is eventually you should get notified if you applied for the EIDL. It wasn't just for the grant. It was for the actual loan from the SBA. And that was the one that I mentioned is the, loan that's at 3.75% and over 30 years. And you gave them information in order to start calculating that. So Larry asked, hey, with that he applied under his properties company, which doesn't have any employees. Any chance we will get it and as a grant? What I'm seeing on people who didn't have any employees is they're getting $1,000. I'm not sure why they just are arbitrarily giving 1,000 as the grant portion, and then the loan portion, those are still coming. And so let me see. I think, yeah, so this is on to my next topic. So I'm going to jump back over to my slides. Let's do this one. Okay. So yeah, since we're talking about the EIDLs, um, they're still being funded. They're being funded very strangely. So one, no new applications are being accepted except for agricultural entities. So there was additional funding in the second round of the CARES Act that specifically gave money to agricultural lending. So I think that's the only thing that you can still apply for through the EIDL. But what has been happening is the funding, so the grant money is showing up. It's showing up in your bank account, says something about EID, maybe says something about SBA, could be anywhere from $1,000 to $10,000, flat amount. No explanation. No explanation for coming in an email form, no explanation coming from anywhere. And I have several clients who got the money going on 3 weeks now and still no email. And so what the email comes from is it comes from the disaster something, I can't remember, at sba.gov and says, hey, here's your loan number, or essentially your account number that you were given. It was your confirmation number that you were given when you signed up for the EIDL. It'll have that number on there and say, click here to set up an account. Set up the account. So you need to go in, set up the account, and what happens is it shows you, hey, this is how much you are eligible for through an EIDL loan. And this, again, 30 years, 3.75%. If you were to get it this month, you wouldn't be making a payment until May of 2021. That email is what everyone was expecting to get and was getting early on as soon as they got the funding, the grant money into their account. Unfortunately, that system seems to have broken down, and I don't know on what basis. And I can tell you that, so the people who have gotten some grant money have not necessarily gotten the notification that they have that they're eligible for the rest of the loan. And then I have an instance of someone who never got any grant money, had at least 10 employees, never got $10,000, got the email that said, here's how much you're eligible for, and sign up and sign the documents and we'll fund your account. So it's super, super confusing. But I will tell you that right now they are still working through them on a first come, first serve basis. So if you applied back in late March, early April, they are just now pushing those through the system. So just because you got the EIDL money, I assume you will eventually get the email that says, here's how much you're eligible for. I do not know still how they're calculating that, because you gave them on the EIDL application, you gave them total revenues for the last 12 months ending on January 31st, 2020, total cost of goods sold for that same time period, and number of employees that you had on January 31st, 2020. Those were pretty much the only numbers. And from what I can tell, when the actual, sign up here and here's how much you are eligible for came through, it did not tell you how it was calculated. I don't know if it's based on a credit check on the business, because they are running credit. There's no personal guarantee on any EIDL under 200,000. However, on any loan over 25,000, the SBA essentially is has an interest in your company. They're not becoming a shareholder, but essentially you're going to be in a situation where you can't make a whole lot of changes until you pay this loan off. And rightfully so. You're getting cheap long-term money. So the other thing, when you get that, you get in there and you say, okay, you're eligible for up to this amount. You have a choice to choose how much you want. You can take the max, you can take the min, and the minimum very well may be how much your EIDL grant was, but I don't know. So there's still a lot of unknowns. And then in the fine print, there have been people who have come out and said, well, hey, it's saying that you have to have reviewed financial statements, which is a big cost burden on a small company. Most people don't have reviewed financial statements. And it doesn't say that. It says that I think within 3 months after the end of the year, you need to supply them with financial statements. And then the next statement says, upon written request, they'll want reviewed accounts statements that were essentially done by an independent accountant. The issue with that is what my guess is, if you send them financial statements at the end of the year and they are garbage, like they don't even make sense, you didn't have somebody look at them, you don't know how to account for things, they're going to be like, uh-oh, and they may come back to you and say, hey, we want to review. The other thing is, some of these loans, you can get up to $2 million. So there's going to be probably a written request for people who have large loans coming through this program, just like the PPP. They're going to be looking at the larger dollar amounts because those companies are taking bigger piece of the pie. They're not going to come after a whole bunch of little guys that are taking 100,000 or less, 500,000 or less. They don't have the manpower to do that. They continue to have the regular SBA program. So this is actually going to put a big burden on them to essentially administer this program long term, and it's going to take them a while to get to that point. There's also in the fine print, there's no prepayment penalties on this, and no personal guarantees. All right, let me jump back in, see what other questions we might have. Okay, so if others have received the EIDL, did they receive the whole amount or are they sending in payments? I don't know. I've had people that have applied, but I don't know that I've had anybody get funded. You are able to take payments on it. So but I believe it has to be fully funded by June 30th. My recommendation is if you get, they say you're eligible for 100,000 and they're willing to give it all to you now, take it. Because what happens when the money runs out again and they earmarked it for you, but they may not have it? So I would say take it, stick it in a savings account, let it earn a little as you are using it towards other expenses. Keep in mind, if you did get the PPP loan and you get the EIDL, for those first 8 weeks, you technically are not using that EIDL money for payroll. You could use it for other operating expenses that are not covered under the PPP. So if you got your PPP and you can use it all 100% for payroll costs, do that, and then they use the EIDL for rent and occupancy costs and reimbursing mileage and all those other things that you might have, or vendors. You're going to pay. It's designed for working capital, so you're going to pay your suppliers. You're going to pay for repairs and maintenance on your vehicles if you use them for business and those types of things. So just know that you can't be using it for the same funds, or for the same purposes. But keep in mind, again, you are not keeping that money in a separate bank account and saying, oh, I can only spend these earmarked dollars for this. It's more so once the PPP is over, it's fair game. You're spending it on whatever you need to. The other fine print issues that they have on there is both the PPP and the EIDL is spend in America as much as you can. So if you get the EIDL and you think you're going to suddenly send a bunch of money to China to be bringing in your product, you might want to be very, very cautious. Depending on how big of the loan, if you got $1 million, be super cautious. If you got a smaller amount, they're encouraging expenditures in America for good reason. I mean, it's to stimulate our economy, not the economy of the other countries. Okay, so if we use more than 75% on payroll, it's okay. Absolutely, use 100%. Yeah. So if your payroll is actually increasing right now, you may not be spending anything on any of these other allowed expenses at all. You may not have to worry about that 25%. Um, or you maybe end up spending 85%, and it's real easy to get to 15% on rent or utilities. So yeah, you want to hit 75 as closely as you can. Not hitting it does not say does not make none of it forgivable. It reduces it. Uh, it kind of prorates it, if I understand correctly. But again, not a lot of guidance yet, and so as soon as we get more guidance, we'll talk about it again. Um, okay, so it looks like Michelle had some information relating to um, how they're calculating it. She actually got on the phone with the SBA, and I've heard that people have been able to actually get through to them, which is actually pretty amazing to me, because I am one who has spent feels like a good portion of my life dealing with the IRS, who are impossible to get a hold of. So having the SBA out there is like, oh, they're actually answering their phone. You're actually getting to a person. That's amazing. So and Michelle's putting this in the comments. So if you guys are looking in the chat, she says that she was right when they opened. So at 8 a.m. So there's, yeah. So let's see. So yeah, so it looks like somebody was telling her that there is gross profit to a max of 500,000, is what they're trying to calculate. Honestly, from what I've seen and knowing the numbers that have been put in, I have no idea. And it could be that they are limiting based on personal credit. They could be limiting based on how much funding they have. I don't know. I honestly do not know how how their SBA is calculating the uh, disaster loans. So I still am telling people, um, if you can't afford a loan, don't apply for the PPP and don't apply for the EIDL. They are loans. If you think a year from now you're going to be out of business because of everything that's happening, that would be so unfortunate. But if you think getting these loans isn't even going to pull you out right now, that it's going to be like, too little, too late. I missed my window. I missed whatever. Then I would say, then don't apply. But if you've already applied for the EIDL and you get the notification, and the maximum amount makes you uncomfortable, then take a lesser amount. But keep in mind that money is to get through the disaster that is considered a disaster through December 31st of 2020. We're not looking at the disaster being over on May 31st or June 30th. We're looking at going through the end of the year. The current situation is creating an economic impact that is going to ripple for a while. And we don't know when the markets are going to come back, when we don't know when, if it's going to, the predictions and again, I'm still staying so far away from the news. But, there are what happens in the winter when this comes back and we don't have vaccinations yet and all this. And so I'm just saying, be prepared, and a low interest loan now to help you get through 2020 is that's easier to get, may be worth it, even if you're going to sit on those funds for a little bit. Because when you get to the point where you actually are in dire straits and need to get some sort of line of credit or financing into your company, and these opportunities are gone, it's going to be harder. You're going to be back to going to the traditional route of an SBA. You're going to be back to having the personal guarantee requirements and credit history that the banks were requiring before these. So for me, this seems like you get it, and there's no prepayment penalty. So you get to the end of the year and you're like, I'm sitting pretty and I don't want this debt on my books anymore. I am going to start prepaying it in a pretty hefty way so that it's not there anymore and I'm not under this umbrella. But keep in mind, this is going to be some of the easiest, believe it or not, funding that is available to a small business who has not been in a situation to be able to qualify for a line of credit, to be able to qualify for any type of an equipment loan. And it's hard. It's hard to make the decision. But for me, I'm going to tell you that even if you take that money and sit on it and then pay it back early, it is a little bit of a kind of just a little cushion and a little peace of mind that, since we don't know what's going to happen in the next 6 weeks, 3 months, 6 months, that you know that you would have money there to keep paying your people, to keep making business decisions, and not feel like you're under so much pressure. So again, my 2 cents, you guys hear my 2 cents quite a bit. And I appreciate you listening, and hopefully it's something that gives you some perspective and keeps you from worrying a little bit about what's happening. So let me see if I have any other questions. So Tony, I mentioned that. So loans for the EID, the loans that are given through the EIDL up to 200,000, they're not requiring a personal guarantee by the owners, but the SBA is taking a interest in the entity. So it may hinder you from making some business decisions until that loan is gone. And what that means is buying, selling, changing ownership. If you expect any of that stuff on the horizon in the near future, expect to have to pay this whole loan off before that transaction can actually happen, because they don't want you to get into any type of a situation where it would not be possible for you to make their loan payment to them. So that's the caveat with going through the SBA. It's government funded. It's government money. There's going to be some controls that they're putting there. Any government money. I mean, look at unemployment. It has some rules. The rules are, if you're making money somewhere else, you don't get unemployment. The rules are, if you quit, you don't get unemployment. So because it's government money, there have to be some rules. And so they just essentially don't want their role and their standing with your credit to be hurt by a decision that you make. And so just keep in mind, if there's anything big coming down the pike within the entity that's getting the loan, that you are going to want to be in a position to pay that loan off before that happens, because there could be some repercussions there. Okay. All right. So last topic today is unemployment. So it's flowing. Interesting though. So as you know, my husband has a small business as well. He is directly impacted by the shutdown orders, because his business is based on mostly selling things that people are using for with disposable income for racing, hobby related events. And our racing program across the country was shut down. So nobody was preparing for it. Nobody was buying the graphics, the helmets, the seats. Nobody was doing any prep work to their cars. And so that became an issue in the busiest months of his year. So he's self-employed. He is in a partnership, so he does not take a paycheck. And so he was able to apply for unemployment based on his self-employment income from his partnership. And so that finally started. He got 2 weeks, and then this week we don't see anything. Although it says it will be funding, but it looks like instead of hitting yesterday, maybe it's going to hit next week. And maybe there's going to be some catch-up weeks, because he was impacted essentially, the first week of March or the first week of March, or in March when everything was shut down. So unemployment is flowing. The extra $600 is going out. It is making people feel like they're making more money on unemployment than they are as an employed person. So here are the things that are coming up. The PPP funding. If you are self-employed and you got a PPP loan and you had applied for unemployment, you are going to stop opting in as soon as the PPP money has funded into your account. Unemployment is an opt-in program. So every week you're reporting how much money you made. Well, as soon as you got the PPP money, you were back to being fully employed, and you will stay fully employed for 8 weeks because all of that money was essentially given to you to replace your payroll. So you don't get to do both. You don't get to say, okay, let me take an eighth of this money, for 8 weeks and show it to unemployment, and then they still get to give me some. That's not how that works. It's a PPP is a replacement to unemployment and always was. So, other issues that have come up is, how does a self-employed person continue to opt in by reporting income? If they earned some money during that week, and maybe it was less, maybe it's, you need to include any money, the payments the customers have sent to you. You need to report that to unemployment. This is if you didn't get the PPP money. This is if you didn't. So see, if you didn't get the PPP money and you're still collecting unemployment as a self-employed person, you still need to report what earnings you have had that week. The question for me, so is it net of expenses you had? Because typically, a lot of times, a customer's paying you, but you had expenses against that money. Maybe you had to then pay a contractor for some of the work. Maybe you had, regular monthly costs, for subscriptions and computer software and things like that. So I'm not sure if it has been any additional guidance out there on that. And then, like I addressed earlier when Tony asked, if you contact your employees that you have laid off or furloughed or allowed to take unemployment, and they refuse, then they quit. And when you're on the phone with them and they're refusing to come back, you need to tell them that they quit. In this case, if they refuse to come back and they have quit, then you will report that decision to the unemployment for them, that they are, and they'll no longer get unemployment, and they will no longer get unemployment back to, so if the system doesn't catch up to them, they're going to owe it back. So you need to make it really clear. The other piece of them quitting, that you don't keep them on any benefits. So if you furloughed somebody, typically that means you're going to keep their benefits rolling for them. You bring them back and you're like, okay, all is good. We kept you on benefits and we brought you back and everything's cool. If you kept them on benefits and then you tried to bring them back and they said no, then again, they quit. So in the UI Interact site, which is the unemployment insurance, I don't even know what it stands for. Every employer has this site, and this is where you are filing for, this is where you file your quarterly forms. This is where you report, protest benefits. This is where you do everything. There will be a place in there for you to report on people who are refusing to return to work and report them as a quit. I will stand on my soapbox and tell you that you need to do this, because the government program that is in place, which is this unemployment that is now being supplemented by federal funds, that is going to eventually, and probably faster than any of us want to think about, result in higher taxes. And the longer someone is staying on it who is not obligated to be on it, the more that program is being abused, the higher those taxes are going to end up being. And tax increases are coming. They're going to come. They're going to be, who knows? They're going to come in every way, shape, or form. Currently, if you're an employer who has people on unemployment due to COVID-19, your rate is not supposed to be increasing. So if you had a zero rate because you've had such a great track record for years and years and years, these people should not impact that rate, and you should continue after this with a zero rate. but I don't know when that window is going to end. So if you laid them off and they're collecting unemployment, and you don't report them after they refuse to come back to work, they're still reporting against you as benefits charged. There's going to be a date at some point that Missouri is going to say, yeah, now benefits charged after this date, we're going to start impacting your tax rate for it. And I'm guessing we're going to see a tax rate across the board go up for everybody next year. Not necessarily, they're going to say not necessarily because of COVID-19, but we're going to have to replace these funds somehow. And so employers are going to get hit. And so just from a standpoint of, one, somebody who's not working and is choosing not to work shouldn't be on unemployment. That's a choice. As soon as you gave them their job back, they should come back. And if they don't, they're no longer unemployed. So they shouldn't get unemployment. They shouldn't get benefits. And guess what? They're not going to get a paycheck from you either. And that's unfortunate, but it was a choice that they made so that they could stay home and make more money on unemployment. Like I said before, maybe not an employee that you would want to think of as a long-term team player if their solution is to get paid for doing nothing is a better option than getting paid for a job well done. So, again, my soapbox on that. Keep in mind, as employers and as individuals, our tax rates are going to go up. One, we're going to have, it's an election year. Two, the programs of the CARES Act, the FFCRA, all of these things that they have put in place to keep us rolling through this downturn eventually has to be paid for. And so typically that is going to come in the form of increased income taxes. So we can expect for I would say probably definitely by 2022, I don't know. It depends on how quickly any type of turnover in Congress, how quickly, if there's a change in leadership in November, how quickly, people are going to start to try to put in place any type of tax law changes. But it's coming. Believe me, it's coming. So let's see. I got any others? So, will unemployment contribution rates get affected if employees are not brought back, but we received the PPP? No, I don't think there's any way. So Tony's asking, will unemployment contribution rates get affected if employees are not brought back, but we received the PPP? So in all honesty, the PPP and the unemployment systems are not related. The challenge here is that the employer who receives the PPP is charged with using that for payroll costs. And in order to do that and have it incentivized to be forgiven, they need to bring people back, and they need to bring them back at a certain rate and a certain number of hours so that they can meet these requirements. So they really push this through as an incentive to bring people off of unemployment. The questions that keep coming up are, well, I got the PPP money and I don't have people to pay because they didn't come back. Well, you either need to figure out how to rehire, increase hours to the people who are there, or you need to realize that you're going to have a portion of your PPP that can't be forgiven because you cannot meet the payroll costs. Will it affect the unemployment rate? Again, we don't know when the cutoff essentially that Missouri is going to pick to say, okay, anybody requesting unemployment or receiving unemployment after this date will be charged against your account, and we will calculate it accordingly. Excuse me. We don't know when that date is. So my guess is it's going to exceed the PPP date. So if you've gotten your PPP money, you've been funded, and you're in your 8-week window, then the chances are Missouri is not going to suddenly impact rates within that 8-week. We're going to be in this window for a while, but it does not state how long that's going to be. It essentially is very vague and says, if the unemployment claim is because of COVID-19, then your rate won't be affected. However, right now, they are not distinguishing. I mean, they're not saying, hey, were you laid off because of COVID-19? Of course you were. Right now, everybody was. So I think the two things will be unrelated, and essentially there's going to end up being a point in time, and maybe it's not until January 1st when they start saying, okay, claims after January 1st are no longer in this window. Maybe it's at a quarter, maybe, I don't know, because the only reason I say at a quarter is because that is how they calculate the benefits anyway. They look back to the last 4 quarters of earnings on a person. And so I think we probably have at least through the end of second quarter before there might be any rate increases. Okay. All right. So that's the update on unemployment. Biggest thing is if you got the PPP, you might want to get off of unemployment. Are they going to come looking for it? Probably not. Everybody, one, they're either working remotely. 2, they're overworked because the volume has increased just astronomically across the board for any of these agencies. And so they don't have the time to go looking for it. But just from an ethical standpoint, a moral ground for me is you asked for the PPP and got it, you don't get to get unemployment anymore. So, all right. So as always, I've got my key resources here for places that you should be looking for things. Some of these things are probably expiring a little bit. The stimulus checks, the economic impact payments coming from the IRS, those have started to be distributed. They're getting out there, even for people who didn't file their 2019 returns yet. So there's definitely movement there where there's probably not going to be a whole lot of questions anymore relating to that. But still, I would say the biggest place is treasury.gov if you're looking for information on the PPP stuff. Excuse me, SBA.gov. I'm having a hard time finding some real answers, like how they're calculating how much they're offering you on the EIDL. I cannot find that from an SBA source. And God love you, Michelle. I'm glad you picked up the phone and called them. I just don't, I assume nobody's going to answer. So I have not picked up the phone and called. So as always, go to your reliable sources. Don't assume that the Wall Street Journal and the local news channel and even a reliable source within your industry has the right answers. You need to go to the source, and treasury.gov has a list of frequently asked questions that they are updating every couple of days. And that has a great layman's version of interpreting some of these rules, interpreting how payroll costs are calculating, interpreting what can be included, interpreting who's going to be looked at. You got more than $2 million of PPP, assume you're going to be looked at. And as always, follow us on Facebook, join my mailing list on WLXCO. I sent out a survey this week asking for what types of topics people might like to be trained on in the future. I'm hoping we're going to get past this COVID-19. And so there's lots of other topics relating to your business, about your numbers, about QuickBooks, any of those things. If you are interested in being trained on those things, let me know. And I would love to put together some training resources for people that really feel like they can get some more out of either their software or their business, or understand some financial related just complexities that it would be helpful for you to know on an ongoing basis. So please join my email list at WLXCO, and you'll be notified of all of the things that are coming. And the last update is if you need to schedule not just an appointment, but a phone call right now, since we are all virtual right now, it is way easier if you go to our website and choose schedule appointment. If you need to schedule a phone call with me or a member of my staff, use the app on there, and that will notify us, and we can schedule a Zoom call, or we can schedule just a regular telephone call. So, as always, happy Friday. I hope everybody enjoys your weekend. And if you're a mother, please have a wonderful Mother's Day. And I look forward to talking to you soon. Bye-bye.